Hey there traders, welcome back to another episode from the StockBandit.tv. This is episode 9 and it's your market view video for the week of January 26th. So let's take a look at the major averages and see what the big picture looks like before we get going this week, because as you know, this has the biggest impact on how individual stocks move. And as we get a good feel for the big picture and what's taking place out there, we have a lot better idea of not only how we should be trading, but what we should be trading. And so I want to run you through the major averages and kind of give you the lay of the land. Let's see what's going on. The first index we're going to take a look at is the Nasdaq Composite. Now, obviously, we bottomed out in November. Since then, we've bounced back up, and we've spent the majority of our time in this big channel. We've been moving sideways generally since this initial bounce back up. Now, we recently cleared this channel to the upside, but that breakout failed, and we've now sold off recently and have found some short-term support. We are hovering above the bottom end of this channel, which is at the 1400 area, but that's still not too far down from here, especially given how far we've come off the January highs. And so this level is going to be very important if we see this market turn lower this week. But I want to zoom in a little bit here on the chart and kind of show you something else. Since the big correction earlier this month and some short-term support having been found in the past several days, meaning we keep kind of tagging this same area each day, there is the potential that this level is able to hold and we do catch a bid and rally higher. Now for the Nasdaq, that would require a move above this yellow downtrend line, which is currently just above current prices. And so what we need to see for the Nasdaq is a good solid push above about the 1505 area and a close above that on good volume in order to really consummate this trend line break. We attempted to break it on Friday but couldn't close above it. We need to see a good solid close above it if this rounded bottom scenario is going to play out and lead to a lasting bounce. Now if that does happen to play out, if I'll zoom out a little bit here on the chart, with this big downtrend having found a low in November, and then we've rallied up since then and we've pulled back to a higher level. If we do rally from here, then of course that's going to create a higher low on the daily chart. So the lows that we made last week will of course be considerably higher than the lows that were made in November. And so if a lasting trend change is going to occur, we're going to eventually need to see a higher low than this November low and see a rally from that area in order to really make that scenario play out. Now, as we move on down the list, S&P 500, very similar story here. Bottomed out in November. We've rallied up. We've spent the majority of the past roughly 11 weeks in this trading range. We tried to break out above it recently, earlier this month, sold off harsh, and we've been really testing the low end of this trading range for each of the past several days. That's at the 815 area, and we hit it all 4 sessions last week. We crossed that level, and we're currently above it right now, closed at 831. But here again, there's a potential that this breakdown out of the channel could be a head fake type move to offset this breakout type head fake that we saw earlier this month. And so that's something to certainly be on our toes about. But if we can see this index start to catch a bid and rally from here, then of course that will again create a higher low on this daily chart, and that's going to be a very good thing. So Dow, very similar story. Same pattern here. Got the low in November, failed breakout early January. We're currently sort of trying to carve out a little bit of a rounded bottom here, but in order to see that scenario really be confirmed, we're going to need to see a good solid rally and a push above the 83, 8400 area to really prove that. Otherwise, this index is certainly vulnerable to coming back down and testing those November lows at the 74.49 area. So that's what we're watching. Now, one other thing I want to point out is the VIX. This is the Volatility Index. Now, after hitting historical levels up here back in October, and just huge volatility throughout the period of September, October, November. We have, of course, created a lower high on this chart, and we've sold off and created a lower low, and so that's important, that the VIX is trying to trend lower here. Now recently it has seen another spike up here, and that's of course a lower high, but right now it looks like it's trying to sort of roll over here. And if we can see this index undercut about the 45 area and really close under it and start to head south, then we may come back down into more normal levels of volatility. And of course that's going to free up this market and really reduce the panic and the fear out there and allow it to start to climb and build on the upside. But until then, we're still sitting at elevated volatility levels, sitting at 47. If I zoom out here on the chart, we see that last year this time we're hovering around the 29 area, and so that's something that really puts this into perspective as to how much higher the fear index is right now. But something to keep an eye on this week. See if we can undercut this kind of 45, 44 area and get down back into the 30s or head toward the 20s. That would be a big improvement for this overall market. I'll have more videos for you this week. Be sure and check back often. Until then, trade like a bandit.